I want to bring in Tom White, co-host of Fast Market, a senior options contributor, to help set up the action today. All right, Tom, it started over the weekend. I was seeing charts of the spike in oil prices, and it was like, uh-oh. Okay, still bumpy this morning when you think about where prices stand. We already had a huge surge this week. So how do you make sense of all the gyrations in the oil markets?
Well, I think you're going to continue to see those coming to fruition here. You know, you've seen production pullbacks in the Middle East, whether it's out of Iraq, which is down about 70%, Kuwait basically pulling back on all their production right now. Now you're starting to see some impact due to maybe some of the reserves that are in Iran getting hit as far as targeting from Israeli and U.S. troops. So those are going to be the concerns here. And I think if you look at, the Strait of Hormuz still closed at this point. They said there was some speculation that maybe a few tankers got through under the guise of the U.S. military. We'll have to wait and see on that. I think that would be a big relief. The potential impact if China gets in here. Remember, a lot of the oil that Iran produces is bought by China and India at this point. So if they start running low on crude oil, that might have an impact down the road. But yeah, this is all going to be about headline risks. Iran still sending drones to Middle Eastern countries at this point, trying to still fire missiles. They're trying to reinstate the Khamenei's rule by, basically labeling his son as the new successor at this point. So, there's going to be volatility here. You see it in the VIX. We're hitting levels that we haven't seen, for, nearly a year since those April lows last year and that tech sell-off. But you know what? If we're at levels in crude oil that we haven't seen since Russia invaded Ukraine in 2022, I would expect that to continue because the resolution to this potential conflict with Iran is probably going to last a little bit longer than maybe the market wants at this point.
Okay, great point. And we have President Trump sounding off on Truth Social about oil prices and the increase in oil prices, saying the short-term prices, he says it will drop rapidly when the Iran nuclear threat is over. He says it's a small price to pay. So the question is, that begs the question that people seem to be asking, how long will this last? At the same time, you have airlines under pressure. Talk us through that.
Well, yeah, I mean, if you think of it, their biggest expenditure right now, besides maybe employees, is fuel, jet fuel, and that goes right to their margins. And that's why you've seen airlines come under pressure over the last week and a half since this started. And that's going to continue. You look at the cruise lines, those are also being negatively impacted at this point. Now, if you look at the airlines, there's not much capacity that goes through the Middle East. That's disruption. I believe Delta's is less than, 1%. United might have the biggest exposure, 1.5% to 2% of their total flights going to the Middle East. So disruptions on that front probably not going to negatively impact the airlines that much, but it's all about crude oil and jet fuel prices because that goes right to those margins that I talked about, and that's going to be a negative drawdown. Now, there's also going to be that lag maybe effect of people maybe not traveling, maybe canceling trips at this point, especially in the cruise line industry. They're pulling a lot of maybe the routes that they were initially doing in the Middle East or near the Middle East and trying to move those. But then again, maybe you're going to start seeing some cancellations here also. And then just a disruption to equity markets. Remember, the S&P 500 down 2% last week. It's down 1% today here in the pre-market. And we're getting farther and farther away from those all-time highs. So that wealth effect kind of negatively impacts maybe potential travel moving forward also. So there's a lot of spinning wheels here in these different sectors. You mentioned the ones that are doing well today. And we'll have to wait and see because the small caps got hit late last week, down over 4%. The Dow was down over 3%. The tech actually did pretty well. IGV actually rallied last week. Amazon did well. Microsoft did well. So there are pockets that are doing okay, Diane.
Pockets doing okay. One thing I find interesting, just curious to know a quick thought on this, Tom, is in the metals, you don't see a big move in gold. Usually when you see volatility, you see more of an uptick there. What do you make of that?
I think it's more of an exhaustion. I think if you looked at the moves in, especially in gold and silver, it was getting really speculative there towards the tail end of their rallies here. But I think if you take a look at the strength of the dollar, that's probably capped a lot of the recent gains in whether it's silver or gold, especially during all this uncertainty, right? Because uncertainty typically has investors piling in to the safety play of whether it's gold and other precious metals. That's not actually happening right now. And I think it's due to the fact that we've seen a resurgence in the dollar over the last couple of weeks, and that's kind of stunted maybe the growth there. Now, we did see a nice little rally in Bitcoin last week, Diane, as investors kind of took advantage of the recent weakness that we've seen. Bitcoin down about 0.5% today. And back below the 70 or 68,000 level at this point. But we hit, I believe, 73,000 last week, and Bitcoin had pushed back into those that asset class, but weaker here today. But you've got to watch that dollar, I think, when looking at the precious metals, because it's not used as a safety play as much right now. Now you're seeing a lot of flows into energy, crude oil stocks, just to kind of maybe gauge the safety play within those asset classes at this point.
All right. Thank you, Tom. Appreciate that. That's Tom White, host of Fast Market.